Let's just take a look at those Safaricom numbers. A lot of volume coming through, quite a lot of excitement about the fact that Safaricom is increasing on the revenue front. But again, profit lines are not what we expect. It's still down around 5.5%. When are you expecting as an investor to start seeing a positive number coming through on profits?
Very good morning to you. Just to be clear about that, it's not that the profitability actually decreased. It is just the growth element that took a slump. But the company continues to be very profitable. It raked in a profit of about 12.6 billion shillings. But now with Safaricom in the current situation, what has become very, very clear from the results just released is that the company is now really at the mature kind of phase of growth. The high growth of yesteryears seems to be long gone, and the management is actually giving guidance of very low or rather single-digit growth in terms of the revenues looking forward. But looking more critically at the numbers that came out yesterday, we can really see that Safaricom is not the great star that it was, say, particularly at listing. We look at, for example, the gross profit margin. At listing, it was about 58%. Last year's results came in, and that number was about 48%. Look at the net profit margin at listing. It was pretty high at 23%, and now it stands at just slightly over 12%. So you can really see that this is a company that's really mature, and that's why the need for new value addition services is absolutely critical at this point. Looking also at the dividend payout, we see a slightly increased dividend payout of 10%. But what that really has to do with the company's maturity is if you actually turn that around and look at it in terms of the retention rate. At listing in 2008, the company had a retention rate of slightly over 85%. Now they're only retaining about 30% of the total profitability. Yeah. So Safaricom, although it's a great company, we are beginning to see that maturity really come into the market.
Again, I mean, we spoke to Bob Collymore, the CEO of Safaricom, yesterday, and again, a lot of worry coming through with regards to the price wars. That has been very evident in the market for quite a few years. The tariff and, of course, the interconnect fees, that also being a very big unknown, Kimathi. And, just pushing Mr. Collymore on that point, again, it seems that the company is starting to prepare itself for a movement on that front, but still not too very vocal about the kind of impact that one could expect on the overall profit and revenue side of things. What are you pricing in at this stage?
Well, at this stage, what is very likely to happen is that reduction in the mobile termination rates is likely to impact Safaricom very hard. And from the results last year, if splitting it at the media point in terms of halves, you'll see that the first half of the year, really, the company did not perform particularly well. It's only in the second half when there was a freeze in terms of reducing those mobile termination rates further, that the company was actually able to rake in very good performance. So the CCK, which is the Communications Commission of Kenya, intends to re-embark on those mobile termination rates and bring them down further. And that's likely to put quite a bit of pressure on Safaricom's profitability, and also likely lead to quite a number of customers ditching them in preference for other mobile providers, owing to their pricing strategy at this point.
Absolutely, but again, I mean, Safaricom still has around 67% market share in Kenya. Yes, it is down from almost 70% in terms of what we saw in 2010. The number 67% is the 2011 December number. It's still quite a large chunk of the Kenyan market. M-Pesa seems to be the big focal point for a lot of the consumers out there. But this is despite the fact that there are new products on the market. But again, consumers are just very loyal to the M-Pesa Safaricom product.
Yes, that's absolutely right. Actually, if you speak to anyone on the streets of Nairobi, anyone in Kenya, it is actually the M-Pesa that keeps us locked to Safaricom. It is, has little to do with the voice aspect, little to do with the data aspect, where we are seeing a lot of competitors come in. It really is the M-Pesa, that is in mobile money transfer, that really keeps us locked onto Safaricom. Now, on the bullish side, that is a great thing. But unfortunately, if the other providers come in and are able to bundle up and provide a one-stop across network solution, then really the competitive edge of Safaricom would wither away overnight. But for now, M-Pesa is really the big growth trajectory for Safaricom.
Let's touch on Diamond Trust Bank, out with results as well. First quarter pre-tax profit, that was up 54%. Lots of income coming through from the loan book. This is quite a significant jump, Kimathi, and I suppose this bodes the question whether these levels could be sustained.
Well, the sustainability of these very high double-digit numbers is something to question, because these are numbers that are actually not unique to Diamond Trust, but we've seen them kind of coming from several bank houses on the market. Now, for DTB, what is very unique about it is its very kind of close-knit association with the Aga Khan Fund for Economic Development, which is the lead shareholder. So we see them getting quite a bit of support from the Aga Khan group. And what is very likely to happen is that with an increased capitalization of the bank, then we hope that it's something that will be sustained on the long haul. However, look at the banking industry as a whole. There is this huge need for capitalization, and that is really spurred by what is happening on the Kenyan macroeconomy, which is that we've had a lot of inflation. That means now there is much more money out there, and now with the banking capitalization really not growing as fast as the inflation rate has been, what has happened is that a lot of the banking ratios are really squeezed. If you look at Diamond Trust, they are only able to meet the CBK requirements and surpass them by very small, slim margins of between 5 and 8% as far as the capital adequacy ratios are concerned. So it really is a need for increased bank capitalization so that further growth can actually take on.